Welcome to Self-Funded. I'm your host, Chrissie. 10 years ago, starting a business around yourself was something reserved for celebrities. Today, professionals everywhere are breaking away from the 9-to-5 and building businesses around their own experience and expertise. On this show, we'll explore what it really means to be self-funded, the movement of professionals carving their own path, creating cash-flowing businesses, and building lasting impact without waiting for permission. I'll share my own journey and talk with others who are rethinking what's possible when you take your career into your own hands. Let's dive in. My guest today is Eryn Schultz. Eryn Schultz is the founder of Her Personal Finance. She is a certified financial planner, in-demand speaker, and Harvard MBA. Through her online classes, workshops, and one-on-one advising, she has helped hundreds pay off student loans, figure out how much cash to keep on hand, and finally feel confident investing in and outside of a 401k. Eryn and I talk about how she developed her business model, how she's created a flywheel between education and advising, and how an Instagram DM and a lot of candor around a difficult situation led to one of the most incredible earned media opportunities a founder could have. I hope you enjoyed today's conversation. Eryn Schultz, welcome to Self-Funded.
Thanks for having me today, Chrissie. Really looking forward to this conversation.
Thanks for being here. So you are the founder of Her Personal Finance. For someone who is not familiar with Her Personal Finance, who do you serve and what are the core problems that you're solving?
So Her Personal Finance is an advisory business. It is a financial education and investment advisory firm. I focus primarily on women and couples in their 30s and 40s. I started off thinking I was going to focus on people post-MBA, which was my life stage, but soon realized that physicians and people in tech have a lot of the same questions, and at least in business school, they teach you what a stock and a bond is. So I love helping people figure out, am I on track for retirement? Can I afford to buy the house that I'm eyeing? Should I do pre-tax or Roth? How do I get public service loan forgiveness if you're working for a 403B or the government, and other questions like that.
Oh, wow. And you mentioned business school. Can you tell me a little bit more about your path to this work and, how you became a founder?
Yes, this was not the path that I was on when I was in my MBA. I was actually really passionate about food and food systems and how are we going to feed the 7 billion people on this planet. And so out of business school, I took a role working for a retail grocery chain back in Texas, which is where I'm from. And when I was there, they had a great 401k match, but they weren't doing a lot of plan education or 401k education. And I also found that they had kind of a high fee plan. And as my colleagues at work were having questions about how much should I put into the 401k, what do these investment options mean, is pre-tax Roth right? I realized that all my friends with fancy MBAs had the same questions, and it really set me on this journey of financial education and, setting up eventually. I thought I was going to build a classes business, but realized that people have a really strong desire for individual support and advice, and that is what led me here.
Wow. And tell me a little bit more about your business model. I know there's different structures in the financial advisory space. So for someone who's not as familiar with it, what are the various structures and how do you work?
Yes. So I would say there's the old broker-dealer model, which is the Merrills, all of the traditional big players. And that traditionally was people picking stocks for you, and there was even a kind of commission that they would make based on recommending specific products. That is still a big chunk of the industry, but I would say where I have seen the industry move is to more of, independent registered investment advisory firms, some of which can have, $1 billion in assets under management, but a lot of those firms are charging an AUM fee, which is basically a percentage of the assets that you manage with them. And a lot of firms, as a result, have a minimum asset, which will be often $500,000. Some firms have a $2 million minimum. And that is not net worth. That is money you're going to invest with them. And so I felt really strongly for a couple of reasons, and I think we're going to talk about this later, but as part of my origin story for getting into this space, it was a crusade against high fee financial services products, because when I worked at this retail grocery chain, they had a very high fee 401k, and, a workforce that is not that high earning, that, and people don't think 1% is that much, but that can be hundreds of thousands of dollars over your life. And so I felt really strongly about not charging high fees, not charging really an AUM fee at all. And I also wanted to be able to serve people who aren't currently well served by the model where you have to have 500,000 in investable assets, because that's not your 401k often either. That's kind of money outside of a 401k that you can give someone to manage. And who doesn't have lots of investable assets? Young people that were in my same life stage. So my commitment to wanting to serve people who are in their 30s and 40s, who are making a lot of these big life decisions, and even 20s, was to have a model that allows someone who maybe has negative net worth because they have student loans even to still get advice, because, your 30s and 40s is when it all happens, right?
No, for sure. And as you were talking, I was thinking about your focus on a lot of people who have these professional degrees, whether it's an MBA or a JD or an MD. And yeah, you're right. Like it imagine what you're dealing, even into your 30s and beyond. I imagine what you're often dealing with is someone who has significant earning potential, but is maybe just starting, like, because they, were a doctor who then did a fellowship, and, maybe you're in your early to mid 30s by the time you're actually starting to make your marketable rate. And I imagine that it creates just a different structure than, maybe a traditional advisor would be comfortable dealing with.
Yes. I mean, most traditional advisors deal with retirees because that's who has money in this country. And if you don't deal with retirees, I mean, there's lots of advisors who focus on people in tech, people in medicine, because those are traditionally higher earning professions. But I would say I tend to work with people who are still high earners relative to the average, but household income of 300 to 400K. And if you're single, less than that. Which is less than the threshold of what most advisors are taking. And I'm trying to create a model that makes financial education accessible for more people. And I have two businesses, actually, the financial education business where I teach classes. And through that, it's about $500 for a 7-week class. And that's really designed to be accessible to just about anybody who has questions and wants to have frameworks for making financial decisions, but, can't afford, my rate in my advisory business is $400 an hour, which I had a colleague once say, that means I attract people with $400 questions. And so that tends to be people who are higher earners or who have some complexity in their finances.
So if we go back a little, you're at this grocery chain, you're seeing colleagues who, are asking you questions, like you become sort of this internal expert because of your background and experience. And then you start, tell me a little bit about how the business got started and what your original model was.
Yeah. So when I left the grocery retail chain, I thought I might want to do this. And I actually registered and set up a firm. But before I really was doing anything with it, and the initial vision was a little bit different in that I wanted to try to serve service workers or people who worked for big businesses that had 401k plans but were having a hard time navigating the complexity there. But I ended up getting offered kind of a dream job. It was the company that I had first discovered when I was a senior in college, and basically wrote my business school essays like, this is what my dream would be out of business school. And ended up getting a really cool opportunity to work there in a strategy business operations role, and was like, I got to take this. So I kind of put all of this on the back burner for 2-3 years when I was there. And it was a startup. It raised a Series I when I was there. So things were a little stressful from a cash flow perspective.
I was going to say, I don't even know it went that long. It went that far.
It's a B Corp and a social enterprise trying to do healthy school food for kids.
Wow.
So not a super high margin business, but
Pretty amazing though.
it was amazing. But there was a lot of just internal challenges. And I think both my bosses on the same day, I reported to the VP of sales and the VP of customer success. And they both on the same day said, we're leaving. And I was like, okay. Wow. You know, this is my dream, but this is probably not going to be a place I can grow long term. And so I started to work on this business again. And again, thought it was going to be classes. I did an event for the Women's Association at Harvard Business School in February of 2020. So that was funny timing because it was in person. But out of that, said, hey, would people be interested in taking a live class? And so that was kind of the first cohort. And I was like, I'm going to charge a really low amount because I've never done this before. I want to make sure I just knock it out of the park relative to people's expectations. And out of that first class, had really good word of mouth on a second and a third class. And I think it was good timing because of COVID. People were home. They wanted to learn
had time.
Time. Also, the markets were just... It was a really interesting time in that we had that like very small dip in March, April of 2020, and then the market soared back. And yeah, that really led to the education piece taking off. But people kept asking me to be their advisor. And at a certain point, from a product market fit perspective, it was like, okay, this is where the demand is. And it's classes is a tough business because you're always in launch mode. You're always trying to convince a new cohort of people to sign up and work with you. And so it felt like there was more traction on the financial planning side. And I still teach and I still have a lot of demand for that product. But at this point, financial planning is more than 50% of the revenue.
It sounds like, though, together, it probably creates like a nice flywheel for you of you have the education piece, I assume, sort of pays for itself. You're generating revenue, but it's also lead gen into this more sustainable long-term business relationship. Is that right?
Yes, 100%. And I think marketing, one thing they don't tell you when you start a business is you are basically in a sales marketing role 100% of the time, trying to have people know what you do and what your services are. And I have found the classes to be a really great way to add value. I really believe like serve before you sell. And through the classes, I build a relationship. You know, there's all this marketing data that shows people aren't going to sign up to work with you as a business until they've had 2 or 3 touch points with you. And I have found my close rates, you know, people who took the class who a year or 2 years later come back to me, in some cases 3-4 years later, and say, hey, we want to work with you as our advisor. And my close rate has been like 80% or if not higher.
That's amazing.
I feel very lucky for that. But I think because there's this relationship, they've been on my email newsletter probably for years since then and sort of understand me, my style of working, and how we're going to collaborate together to achieve their financial goals.
Yeah, no, it sounds like you have the expertise, you're demonstrating authority, you're adding value. I think the other thing too, it's probably doing is it's building trust there. And that's probably, I know you said like multiple touch points to sell. I would say it's probably even more important in something like this. I mean, they're not only is someone trusting you with their money, but they're also revealing a lot to you. Like it's, can you tell me a little bit about the relationship and, maybe if that resonates with you of like, okay, the trust aspect that you're building through the classes.
Yes, I think trust is really crucial. And I know we're going to maybe get to this later, but financial services is an industry where it feels like there's really low trust. It traditionally, if you think about that opening scene in Wolf of Wall Street, where they're just calling names in the phone book, like, do you want to buy ABC stock? That is what a lot of people's perception of the financial industry is. And unfortunately, I'm hiring right now. And as I'm hiring, I'm talking to people on different roles, and just spoke to someone who's at one of the big broker dealers, and they're charging in some instances a 1.75% fee, which is very high in terms of a drain on your total returns. That's more than 25% probably of your total returns going to the advisory firm over time. And so I guess just to your trust piece, I think that there's a huge desire to work with someone who people trust in financial services. And maybe because I think you don't do advice only in education if you're looking to get rich. I work harder for my money than somebody who's managing assets and has two touch bases a year with their clients. And I do think the classes really establish that, in part because I'm not selling in the classes. It's truly educational focused. And if people want to work with me, I let them know I am an advisor, but there's not a hard sell.
Yeah, that makes sense. And you mentioned something, we didn't get into it earlier, but can you just clarify, like, advice only? What does that actually mean in practice in terms of like what we talked about, like the percent of assets under management model, like what does advice only mean from a business model perspective?
Yes, it means that I do not take custody of the assets. And so I am just giving advice, and it does work better for people who are comfortable implementing themselves and implementing in partnership with an advisor versus completely outsourcing. But I think that there's been a lot of research that shows maybe 30% of people want to completely delegate their financial management, and that for the 70% who don't, there's not a lot of service models that serve that. And so I'm also able to be a resource for those individuals who either aren't a good fit for the AUM model or who don't want to pay that 1% fee or more.
Yeah, that makes a lot of sense. And it's interesting because you're operating in such a highly regulated space with like such a specific business model structure that's it's been so present forever. But I feel like what you're offering, I feel like your like business model is so consistent with, the values you're talking about as well. So it feels like there's a lot of like, just like, I keep coming back to the word trust we mentioned, is like you're building the trust in the education piece, you're developing it over the relationship, and also just even how you charge, like it sort of permeates all aspects of your business.
Trying. And I feel a very big obligation to like meet that trust, because having someone trust you to help them plan their financial life, they do get naked with me financially, which is scarier for a lot of people than getting physically naked. And I'm at least 10-20% therapist, because there's a lot. I had a client today who got a big inheritance from her father when he passed away pretty young. And she didn't realize the size of it. And we were going through it together. And it's emotional because that was, a way her dad cared for her that she wasn't expecting. For couples who have different financial goals and maybe haven't been fully transparent with each other, not because of even lack of trust, but because it's scary to say, hey, I've got this debt, or I have all these assets, and is that I make less than you? How does that change things?
Wow. As you think about the business, we talked about the building the trust and building these two sides of it. I'm going to shift gears a little, like just more tactically. How do you balance your time? Like, how do you think about spending your time? We were even talking about time management before we kicked off this before we hit record. But how do you balance your time across like the selling, both sides of your business, but one inherently is more focused on kind of that lead gen into this, business model of advice only financial advisory?
It's a great question. And I will say, especially if anyone's like thinking about taking the leap into entrepreneurship, your first 1 to 4 years, you will spend more time marketing and selling than you will as your business becomes more mature. And actually, I have benchmarks for myself in terms of our KPIs. My goal is to do client-facing work for at least 2 hours a day. And I have work blocks to make sure, ideally, it's closer to 3. I am actually actively trying to scale back my marketing and kind of BD type time, because I'm at a place where I've hit capacity and I'm trying to hire. And so shifting some of that marketing time, I used to try to post on LinkedIn and Instagram 2 to 3 times a week. I've scaled that back to once a week. And if I miss it in this exact moment, that is not an issue for me, because we referenced this before, but I was really lucky to get to be profiled in a big news publication earlier this year. And so
we'll get to it. Yeah, I'm excited to chat about it.
Yeah. So I realized I was having so many prospect conversations that I wasn't waiting my time enough to servicing my current clients, and also compliance and some, managing, spending time on the operations side of the business and meeting with my operations lead there. So I like marketing. I like financial education and talking about these concepts. And I've had to say, nope, that is not what I should be doing right now. Client work is the priority.
I appreciate your introspection and like your diligence on it so much, because I think, and we'll get to the earned media, because it's a pretty amazing profile and story that we'll talk about. But it's so funny, Eryn. Like, this is like, I'm having the same one. You said the 1 to 4 years of you're just hustling and trying to do BD and marketing. Like, thank you for saying that as someone who's a year and a half into building my business, the long game. Like, I feel that. And I feel like, and even how you've pivoted and so forth, it's really cool to see, because I feel like sometimes I'm still figuring out like what works. Like, I haven't built the engine, and it's not just pouring gasoline, or whatever analogy you want to use. I'm not at the place where I'm like, okay, I can just pour more gasoline on this fire and I know it's going to take, versus like it is testing and iterating, and sometimes feels like, wait, this is not the path to go down. Am I wasting my time? And I think a lot about like how I'm managing my time and using blocks, but it feels like wearing multiple hats of like client delivery. Am I working in the business, client delivery, or am I working on the business, which is more the BD marketing, like putting myself out there? So I don't know if it's so much a question, but just an observation of, I feel that very much.
Yes. And I know it's very real. I remember about year 2 of being a full-time entrepreneur, maybe year 1, I met a fellow small business owner, and she knew nothing about what I did or where I was at with the business. She just knew that I was a year and a half in or so. And she was like, oh, you're hustling. Yeah. And it was so validating to just recognize, yes, anyone who has just started a business, you haven't probably completely found product market fit and that traction and that flywheel that's going to work for you yet. And give it time.
How do you push through that? Like, how did you go from hustle into something where, and look, it's, I'm sure there are hard points to your business. Like, by no means is it, sometimes the challenges even just get bigger and more complex as you go. So it's not to diminish that at all. But how did you go from, well, I guess maybe what was the pivot point for you from like feeling like you were in this hustle to feeling, I mean, and we're going to talk about the earned media, because I know more recently that has been a huge inflow of leads, and you are booked at this point. But take that aside for a second, because I feel like that's a little bit of a outlier event. At what point in your business did you feel like maybe you're out of that hustle and more into a sustainable growth?
For me, it was year 3 of doing it full time. And I also added on the complexity, and I wouldn't recommend this, but I wouldn't have done it if I hadn't done it this way. I had 2 kids in the first 4 years of growing a business.
I had my second last year. We talked about this. Yes.
Yeah. I mean, no paid maternity leave. Yep. That ramp up was slow, and I have, 2 kids, 4 and under still. So for me, it was year 3. I think it would have looked different if I had not taken 2 periods of slower growth. But I think that for a lot of people, it does hit around the 3 and 4 year mark. And I worked with a coach at one point. And maybe because I teach about investing, I knew and believed in the power of compound growth. And I was like, if I keep at this, like I've seen how much it's grown from year 1 to year 3, I can see the inflection points that are in front of me. And I know it's going to keep going in the ways that growing in the ways that I want. And the second thing is this coach sort of said to me, because at one point there was a firm hiring for something part-time that would have helped me gain a skill set I wanted to gain, kind of an area of expertise in planning, and would have been an interesting way to bring some additional revenue into the business. And she was like, you can either work on someone else's business or you can work on yours. And if you want to kind of make that pivot, you can, because there were points where I was like, I could make more money tomorrow working for someone else. But by sticking with it, I've kind of gotten to build this vision, this thing I really believe in. I'm hiring, I'm hitting the financial metrics that I'd wanted to for my family. But it took patience.
Yeah. Everything you're saying resonates so much. I feel like this is a conversation I am enjoying and benefiting from, and I'm sure others will when we get this out there. So you're now are you 6 years in now? Is that where you are?
I am 5 years in. I went full time in October 2020 and took a little bit of time off because we got married in November 2020. Okay. So I would say January was really
got it. Okay, so we just hit 5 years. Yeah, you hustling the first few, kind of year 3, 4, feeling like there's this compounding factor, and then what now? 3 or 4 months ago? When did the piece come out in the New York Times?
In January. So
okay. It was that recent.
Not that long ago.
Yeah. So let's talk about it. So you have, this incredible, I'm going to say mic drop moment with this New York Times feature, totally earned media. Just walk me through how that happened.
Yeah, and I will say it wasn't that strategic for the business, but I referenced that I worked at this retail grocery chain, and that when I was there, I was very frustrated with how high fee their 401k plan was. And after I left the company, and I complained about it a lot when I was there, and I took it to their investment management committee, I took it all the way up to the C-suite, and was a little bit dismissed in terms of they just had an active management philosophy, which anyone listening knows anything about investing is a little bit not in style as much anymore, especially not in big 401k plans, which have a fiduciary duty to their participants. Yeah. And so after I left, independent of me, a ERISA law firm had sued this big retail company over their plan. And I really agonized over the decision, but made a decision to reach out to the lawyers and ultimately joined the lawsuit, which my parents in particular thought was a very crazy and foolhardy decision. And it's out there in the open. The company is HEB. If you're not from Texas, you've probably never heard of it, but it is like a god. Wegmans on steroids in terms of.
I've heard. I'm not from Texas, and I've heard of it. So I do feel like, yes, it transcends its geographic reach.
Yeah, appreciate that. It's funny because I think in Texas, it just is such a household name, and it's been hit or miss if people outside of Texas know of it. But made the decision to join the lawsuit. Was really anxious about it, and the federal judge, 6 years in, has still never ruled on the preliminary motion to dismiss. So I have followed up with this law firm through the years of like, hey, what's going on with the case? And every time, nothing, or like, we filed a motion, wait, still nothing. And I asked, because generally when you're going through a case of this kind, you aren't really supposed to talk about it. It can mess up or interfere with discovery in the future. But I think my lawyers a little bit had given up on the case of it moving forward. It's probably too strong of language, but since there hadn't been movement, they gave me a green light to say, hey, if you want to write about this, that is your right as a plaintiff. And I pitched it to a couple places. No one responded to me. And I sent an Instagram message to a personal finance writer that I had followed for a long time. And he responded, and took about 6 months from that initial outreach to getting interviewed to the article coming out. I really didn't even know the article was coming out or still live until like 10 days before. And then it was really scary because if you do earned media, I would really caution people, in my experience, you don't get to control the story or the narrative. Mm-hmm. And you often pitch a story thinking it's A and they write B. And that actually did happen here. I thought I was pitching a story about a lawsuit that had dragged on for 6 years. I did not think it was going to be a profile of me. Mm-hmm. And I didn't know if the journalist was going to have a favorable view of my perspective or not. So it was a risk, but wow. I felt very strongly about telling my story, and I thought that it would establish me as somebody who has morals and standards and is not in this industry just to make a buck. And I feel really blessed and grateful that that was how the story has landed.
Yeah. Yeah. I mean, it was incredible. Like, I saw it. I think you posted it, and we had connected years ago when you were first starting. And I saw it and was like, oh my goodness, this is amazing. So if you think back to, okay, like it's interesting because certainly it didn't happen overnight, but in many ways, like I don't think I'm being too dramatic by saying like your world changed overnight once this was out there, and you had a flood of people. Walk me through a little bit of those like 10 days before the article landed. Like, it's going to be published. How are you preparing for it from a business perspective? Like, even like I imagine you probably had to make sure like your website had, enough, like was wasn't going to crash like a Shark Tank product launch or something.
Yes. And I will say thank you to our AI friends for helping me think through this. And again, I don't want to understate that for me, this was a very scary moment. And there was a lot of just anxiety. What is going to be in the piece? Is it going to be good? Is it going to be bad? But in talking through and making a preparation plan, realize, if this is a good article, I may get a huge spike in volume. And so worked with a media company that had helped me before, an agency, to spin up a web page, because from a Google perspective, there wasn't enough time to build and get a full website up for this. Initially, the article was supposed to run like 3 or 4 days after I found out about it. It got pushed, but I didn't know that. And so we spun up a page that was focused on the New York Times piece that had a type form embedded in it to be able to try to traffic control. I also kind of called my admin and said, hey, we need to really go through, make sure everything on the website, all the links work. Like, I don't want people just sending me emails because that's going to overwhelm my inbox. So we set up some just flows to sort of qualify leads, and a lot of thinking about what does that language look like. But I don't work with retirees. And honestly, I got a lot of outreach from retirees. And so I had a list of advisors that I felt comfortable referring them to, and did not include a link to book time on my calendar, because that also would have not given me the ability to qualify people beforehand. Yeah.
I made that mistake very early on with, totally different context, but with my business, where I have like a talent network that I source projects and then have a talent network that I place on the projects. And so when I would launch the long game, I did have like an Airtable set up to capture the talent. But I hadn't like, I don't know if I forgot. I just didn't have a lot of qualifying questions. It was more just like name and email and LinkedIn profile. And I just sent a Calendly link to like anyone who had filled it out. And I think, and again, it was not the New York Times, it was me posting on LinkedIn. So like the volume was different, but it was still a mistake, because I ended up like with days of 10, and they were like 20-minute calls, of 20-minute calls back to back. And just my head was spinning. I was like, this is not productive. So smart of you to create the funnel and the filters, and even setting up the website and everything. It was in a time that you were probably really stressed and just sort of tough to focus, and as you're in waiting mode, really smart of you to set that up.
Yeah, it was fun, but and made some mistakes with it too. But I think overall feel good about the way that we handled it, and I'm still I paced out the prospect meetings. So I still have people, I tried to limit it to 2 a week because I already had a wait list when this happened. So I was like, okay, but I'm hiring. And I think also good business advice I got is if you're working late, it should be to build capacity for your business so that it can continue to grow. Because if you're just throwing your body at the problem, you're always going to be working late and you're not actually ever going to fix that root cause.
Really smart. Yeah. So tell me a little bit about, you're now hiring, like what are you hiring for and how are you unlocking that capacity?
Yeah. So it's an associate planner role. I am going to start the role as part-time, and sort of on a 90-day provisional basis so that I can really make sure this person's the right fit to grow with the firm. But I am excited about advice only, even in this AI space, because again, as I said, there's a big trust component to as we've talked about. And I think that even with AI tools, and I actually see this because I will run things by AI to brainstorm and it's pretty good, but 5-10% of the time it gets something pretty big wrong. And with your finances, you don't want to make that mistake. And it's also been interesting. I don't know if you saw the sell-off that happened in Schwab and a bunch of the other bigger financial services companies on news that there was a new AI tool that came out from Claude, a company called Altruist.
No, okay. I know Claude, some of Claude's advancements also made some stocks, had some impact on stock recently. Yeah.
So the week after Claude kind of made a lot of the SaaS companies tank, something very similar happened in financial services. But what I believe also will happen there is that these AI tools in fintech will enable small shops like mine to provide more services comparable to what a large broker dealer or larger firm can offer now. And so I'm also excited to be growing and, hopefully disrupting a little bit of those traditional business models so that that person will be kind of helping me serve more people.
That's awesome. And that sort of leads me to, as you think about, the next few years, what do you want her personal finance to be known for and positioning?
Yeah, I want it to be a boutique firm and sort of thought of if you're a woman or couple in your 30s and 40s, especially in medicine, I want to be a go-to resource for planning for your financial future, whether that's like how many kids can I have, can I afford a bigger house, etc.
Nice. As we wrap up, what is one financial decision you wish more people made earlier and why?
It's a really good question. I mean, I think it's pretty basic, but I think it's just saving and paying attention to your savings rate. There is such a barbell effect of people who honestly, I feel like 20% of people put their head in the sand and just don't pay attention to personal finance at all.
Even very smart, educated people.
Yes, for sure. And then there's 20% that are like hyper focused on it and are interested in FIRE and that's all they care about. And I guess I wish that more of the middle and more of the 20% realize it's not that scary. This is not rocket science. The fundamentals of personal finance are spend less than you make, invest the difference. And so I wish people got excited about that and sort of understood that, yeah, by saving $5,000 more when I'm 28, like that can really have huge impact on me when I'm older.
For sure. Yeah, no, I mean, I that resonates so much with me. I feel like my 20s was so focused on my career, and even like I started at Bain right after college, and you get the warnings of like, you can't invest in you. Like every time there's a new client, you get an email saying like, this has been added to the restricted stock list. And it frankly like scared me away from investing outside of my 401k. I mean, not that I had a ton of disposable income, but I had some, and I really didn't get very seriously into it until probably early 30s. And, I sort of had this like, well, I don't have any, I don't have credit card debt. Like that's good enough, but I wasn't thinking proactively of like, how do I invest? And so I love what you're doing. And I love how you're sharing both, you're helping people both individually, but definitely through the education piece, I think is so important. So kudos to you for that.
That means a lot to me. And I love that you're highlighting stories of people who are self-funding, because we didn't speak to this specifically, but I had an experience of working for a VC-backed company where it didn't go that well. Mm-hmm. And it really made me passionate about trying to self-fund so I could build a business that I got to shape the business model and how we serve people, and could do it in a way that felt really good to me. And I hope more people will realize VC is not the only path to building a really great, sustainable business.
Totally. I think especially as you have the experience and expertise that you have and you've brought into it. I mean, that's really what, self-funded is about, is like mid-career or early mid-career, we'll call it, not super early and not super mid, people, but who have, years of experience and saw problems, maybe solved it for themselves, which is, what you did, and then saw, other people have it and you could solve it for them too. As you think about it, Eryn, we'll wrap up here. What is something you'd tell someone who is trying to build their own self-funded business, maybe in professional services today? What's advice you would give them?
Have an emergency fund. Don't sleep on the SEP IRA or the solo 401k, because those are great. And I think that the last piece of what we talked about, which is patience, and that compounding is real. And just to give this in a more specific way, I have never gone viral. Very rarely, maybe like twice on Instagram or LinkedIn. But by just posting consistently 4 or 5 years plus, I have like 20,000 followers between different platforms. But it's just showing up. Yep.
I love that. I went viral once on LinkedIn. I had like 2 million views on one post, and honestly, it did very little for me. So there's that, yes, I agree with you. It's the consistent understanding who your customer is, who you're talking to, and the consistent action, I think is critical. So, well, Eryn, congratulations on everything. And, again, like seeing the New York Times article, we'll link it in the show notes, was incredible. And I'm really glad it turned out positively and it's helped you boost your business even further. I know you're booked solid, but you just not necessarily looking for leads, but if people want to follow you and learn more, what's the best place for them to find you?
Yeah, on Instagram is @her.personal.finance. And on LinkedIn, I primarily post under my name, which is Eryn with a Y. And I'll say I am actively adding capacity and people to the team because I don't want to have that long of a wait list. So if you are interested in financial planning, join my email list. But hoping to be able to be onboarding more clients in the fall.
Great. Eryn, thank you so much.
Thank you, Chrissie. It was a lot of fun.
Thanks for listening to Self-Funded. If you enjoyed today's episode, be sure to follow the show wherever you're listening so you don't miss what's coming next. I'd also love for you to leave a review and share what you're most excited about on your own self-funded journey. And if you want to go deeper, check out my Substack. You'll find the link below. Until next time, keep carving your own path.